Hi, morning. Well, what are we going to do today? Oh, the first photo is, this is the first service apartment in Singapore for Ascott. I think it was launched in 1984. I think that's how the whole Ascott business started. Well, Ascott has a long history. Last year we just celebrated 40 years. It's come a long way. I must say that this business has a very special place in my heart because I joined CapitaLand in 2007, and in 2009 it was my first posting as an executive where I have a P&L responsibility, and I was deeply and personally involved in helping to build the business and transforming it from a business that was regional into something that's very global, converting it into a business that is very asset heavy into a very asset-like business, and not different from the journey that what we are trying to do for CapitaLand Investment today. Building the business is never easy, trying to build a global business, and especially trying to build a global business out of Singapore where our home market is so small. Originally doing 1,000 units a year, where we set the goal to try to do 10,000-15,000 units a year. Everybody thought that it was quite ambitious, quite ludicrous, but first year we didn't achieve it. From 1,000 we became 4,000, then from 4,000 we became 8,000 a year, and then after that, the third year we hit 13,000 a year, and after that there was no looking back. And today, if you look back at what Ascott is today in terms of the service apartment space, I would say that we are the leading or amongst the leading players in the world. Okay, the second photo. This is my first trip to India after the Ascendas-Singbridge merger that was done in early 2019. Yeah, I would say that CapitaLand has two parts of the India story to share. First part was the original CapitaLand. We started off, I would say, during 2006, 2007, investing in shopping malls, investing in service apartment. That was the peak of the Indian fever, where everybody was rushing to go in. After that, I would say that there was a global financial crisis and the Indian currency weakened quite significantly. I must say that first part of the Indian experiences for CapitaLand wasn't so positive. The India story for us really changed after the merger with Ascendas-Singbridge. They started off with the first IT park in Bangalore. It's built up 30 years of history. Last year they celebrated 30 years. And the team itself, today we have business parks capability, logistics capability, and we have data centers. And when we first did the merger with Ascendas-Singbridge, we're about 3 billion funds under management in terms of size. Today we're about 8 billion. I think the idea is to at least aim to double that growth from 8 to about 16 billion by 2028. The business has grown tremendously because of the team on the ground. I must congratulate the team, the CapitaLand team in India today. Not only they can source the land, they get the clean title and build it up. And this land itself, whether they put it up as a business parks or logistics and earning good yield, and as the city continue to develop, there are always optionality for you to convert those assets into other users over time. And that's why I'm very, very confident that we can build a much bigger and a much more profitable business in India. China, CapitaLand has also been there for more than 30 years. Last year we celebrated 30 years. Some of you may or may not know, in the first phase, in the first 10 years when we were there, we were actually one of the top 10 biggest developers in China. Towards the later part of 2000, when the capital market started opening up, the local developers really grew. They could do development faster, better, and cheaper. So we knew that at that point in time, it's not possible for us to continue to play the development role in a market like China. And that's why we transformed significantly to become more as an asset manager. And I'm very heartened to at least share that even though the market has been tough in China over the last few years, as a group, we raised about 50 billion renminbi from 2021 to 2024. And going forward, we believe that given our reputation and the capabilities of our team on the ground, we should be able to continue to tap on the domestic pool of capital to allow us to continue to build an asset management business in China. Well, this particular photo here shows the celebration of the completion of the deal between CLI and SC Capital. And it was done at the end of the day where our CLI senior team and the SC Capital's team came together. We spent a whole day sharing, brainstorming, looking of things of how we can work together in terms of opportunities, in terms of fundraising, in how we can help each other to grow a lot faster. Last year, we made two very important M&A moves. One was to take a 40% stake in SC Capital, built by Suchard and his team, a great platform. And Suchard is one of the most entrepreneurial person that I have met in this space in our part of the world. Building up his business from scratch, raising money, building up a great platform in Japan, hospitality, REITs, and also a discretionary fund for Asia. Over time, we'll step up our interest on that platform. It's not just about the platform, it's going to bring in a whole new team and whole new capability that can help us to accelerate our growth in this particular space. Of course, the other platform is in the private credit space. We announced it's in Australia. It's called Wingate. This particular company has been around for a few decades, good track record, good reputation in Australia. And in fact, it took me 2 to 3 years to get to know the founder, get comfortable, getting our team to know them. CapitaLand is no stranger to M&A. In fact, CapitaLand was formed as a result of a merger between two major entities, Pidemco and EBS Land, that led to the formation of CapitaLand in the year 2000. Along the way, different business entities, we continue to pursue M&A. The Ascott side bought Citadines, bought Oakwood, bought Quest. When I first took over as the CEO of CapitaLand, the very first thing that we did was to propose a merger between CapitaLand and Ascendas Singbridge. And when we did the restructuring in the year 2021, we were very focused on wanting to build an asset management business. Of course, we can build everything organically, but I always believe that if there are good platforms that we can acquire, there are teams that we can acquire, it's always something that can help accelerate the process. And we just want to assure all the investors here that it's not just about doing an M&A for the sake of doing an M&A. I think cultural alignment is important, value system is important, and we need to have a common vision about what we want to build together and how we want to get there. Well, this is a picture that I would say capture all the major transactions that took place last year. We take a step back. Actually, the real estate industry has been quite challenging for the last few years. But in spite of that, I must say that CLI as a whole, we were able to do some pretty interesting transactions. As a group, we managed to recycle more than $5 billion of assets, at the same time make some good investments. I think one of the most significant deal that we did was the divestment of the Ion Orchard from our balance sheet and subsequently being acquired by one of our major REIT vehicle, which is CICT. We are a major sponsor of REITs in Singapore, and we thought that it's important for us to demonstrate the leadership in this particular space by continuing to do transactions, not just transactions, but transactions that open up the capital market so that it opens up activities for other REITs in the industry as well. Through all the recycling efforts that we did last year, we managed to reduce our gearing as a group to about less than 0.4, and that's very significant. And it gives us a tremendous headroom that we can use our balance sheet today to continue to make acquisition, to buy mispriced assets, or to be able to pursue M&A opportunities, and to be able to also give strategic capital to asset managers may find it very difficult to raise capital in an environment that is a lot more challenging. The fundamental thing for us to do is we want to make sure that we can invest well, we can find good assets, we can deliver good returns for investors. If you can do that consistently and people trust what you do, you will be able to raise a lot more capital and build a much bigger business going forward. Well, this picture here is the photo that the senior leaders took when we had our retreat in early part of this year in Sriracha near Bangkok, outskirts of Bangkok. The asset management business is really it's a people business. In fact, I wouldn't say just asset management business. And any organization, any company is as good as the people that we have. I look at this photo here, we have a good 20% of people who have just recently joined us. Every year we do this at the very start of the year just to make sure that we align the priorities, spend some time together. So, there's a formal part where we sit down, we talk about the priorities, the important KPI that we need to achieve for the year, and then make sure that everybody knows what you need to do for the end of the year. There's also the informal part. At the lobby of the hotel that we stay in, we had this big foosball competition, and everybody, people forming different teams, different country, this country versus that country. It's all in the name of fun. And if you cannot have fun while going through the difficult journey of being able to find good deals, being able to deliver outcomes and raise money, you'll find it difficult, to feel motivated to come to work on a daily basis. So to me, that's important. That's on the people within the organization. But when we talk about the people, it actually extends beyond that. There are different stakeholders. There's first and foremost the investors. When you invest in us, we want to make sure that you can sleep peacefully at night, that we are doing the right thing, that we are delivering good returns for you and be able to deliver good dividend for you and make sure that we drive the share price of the company. Beyond that, of course, there are other parts in terms of the vendors that we deal with. We want to make sure that for people or service providers, we want to make sure that we pay them promptly for all the services that they have delivered. And beyond that, we want to make sure that we can make a positive impact to the community in the places that we operate. And we do that through Capital and Hope Foundation, where we provide funding to do some of these programs. But beyond that, we get our colleagues involved, because we believe that it's important not just to have a company, but a company with a soul that really believes in not just doing well, but also doing good. Well, 2024 was, I would say, not an easy year, but I believe we did a credible performance. PATMI increased by 165% to about $479 million. But what I wanted to highlight is when we embarked on this journey of building an asset management business, is really about growing the fee income. And for the last 3 years, we have been able to demonstrate a 9% growth on a year-on-year basis over the last 3 years. Happy to say that that's on track. And if we continue to execute well, I'm quite sure that we will be able to achieve double-digit growth, and which is what we all aspire to do. And of course, I think capital return, being able to deliver good dividend to the shareholder is an important consideration as well. And that's why we are proposing to give a dividend, cash dividend of 12 cents and about 6 cents of CICT units that will be given through dividend in species, approximately a total of 18 cents, 12 cents in cash and 6 cents in CICT units as a reward to our shareholders who have been supporting us along the way as we continue to build our asset management business. We have a big ambition for the group. Publicly, I have articulated that we want to hit a FUM target of about 200 billion. What we want to do in the priority is, of course, to continue to build our capability and fundraise for the private funds. And we have a pretty big target for what we want to achieve this year. With good confidence, we want to be able to deliver fundraising that's much better than what we have done last year. At the same time, build a business that is truly global in our footprint, in our global capabilities, and build an asset management platform that is globally competitive in time to come.